Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Thursday, the 16th of December. All right, now pretty tricky day, I got to say. The Fed have come and gone, and I can tell you what, there's plenty of activity. If anything, if you were looking at a short-term trading opportunity, you might have done all right. If you thought this thing was going to run, well, you've probably been stitched up. Now, equity markets bounced. Okay, not as expected. I'll explain how all this works. You'll understand why the equity markets have gone up. Now the whole focus obviously was, they were talking about doing their tapering, right? There's a whole bunch of things to read here. What was very good to see and read through was the comments that were coming up from Powell, the key components of the statement, then the press conference and all these sorts of things. It's quite interesting, right? So they're going to be very aggressive. They're going to complete the tapering very quickly, and that opens the door for them to start moving interest rates around. Now, that's why the dollar sort of popped to the top side, right? If you just come back over here to the majors, you'll see it obviously clearly. The currencies, the dollar rallied first, pushed a lot of these pairs down, and then came actually everything was just going up, and then came the crunch. Now down to interest rates. They were talking about potentially interest rate hikes next year. One of the key components for me was here we came out and said, well, we can't act as though it's a certainty. Let me just come back over to the news page here. Around here, though, certainty on interest rate rises next year, right? He's come out and they've identified, inflation's high. That's why we've done the tapering. We already knew that, right? They were we'll complete the tapering of asset purchases. So that everything was done as expected. Now, what was unexpected was them saying, well, we may not be raising interest rates next year. So that sort of cools the market down. But with it, what it does at the same time, it cools the dollar down. So the dollar turned around very quickly and started reversing against everything. And once you get through, like the Kiwi broke through some resistance there as well. Aussie performed quite well, went down, came back and has tested resistance, whereas sterling was a bloodbath and you had a bit of a false break trade the downside on euro. The dollar index, as it was, if you're looking at the dollar index against all the other currencies, well, the Fed delivered exactly what they said. The interesting part, the unknown part was, what were they going to say after, if they said they were going to complete the tapering, what's next for interest rates? And that was where the uncertainty came in and all these moves, right? So it's hard, I keep saying this all the time. It's very hard trading central bank announcements when there is no chance of an interest rate hike or change of interest rates. Well, you go through all of the speeches here from all the comments, etc., from Jerome Powell. There's lots of good things in this, right? They're very confident with the position they're in. They are in a very accommodative stance with regards their policy now. They've now got control of the market. They can start moving interest rates around. So, but it's not a certainty that they're going to do it, right? So what it's going to come down to, and most importantly, if you read through all of the comments, it's going to come down to the numbers, right? The economic numbers. And, there's a little bit in there about, what the next part of the pandemic might be, but a bit of an uncertainty. So they don't really sort of spend too much time on that. But so if they've got a strong economy, they've got an economy with high interest rates. So that's why they've done what they've done. We all knew that. So basically, we just got to keep an eye on the economic numbers going ahead, and that will determine when those interest rate hikes will be, which is, you can't get a better solution or plan ahead as far as the central bank's concerned. So when they've taken the pressure off the whole prospect of interest rates, like the pressure on interest rates, that sends the equity markets up, right? And also, obviously, it's a bit of a risk-on situation. The dollar block rallies and the dollar falls, right? That's the whole scenario, and that sort of played out. But you know what? Once again, if you're trading this, that isn't obvious until, 3/4 of the way through when he mentioned something about interest rates maybe not going up, right? So it's not like you can just hang on. Like the first impact is, yep, we're going to finish the aggressive tapering. You get that move down. Now, sitting in the position whilst there's all the important unknown things are about to come out, obviously in hindsight, it's a mistake, but we never thought they were going to come out aggressive. They don't want to blow the market out, so there's going to be interest rate hikes, et cetera, et cetera. That'll put the fear of God into everyone, and everyone will stop spending and everything else. So I think it's, if you've been caught up and you've gone short euro or sterling or anything for that matter, or long dollar Swiss or dollar CAD or dollar yen, look at the event, understand what was expected. They delivered that. Then they put some extra icing on top with regards to interest rates, and there's your answer. So it's not until everything's said and done that you work out, okay, now we know where we are with regards to the Fed, what's going on, and there's a serious plan here. It comes down to the economic numbers. The market's got super aggressively carried away here on the first move, and that may be they didn't expect the Fed to be that aggressive, okay, to complete the tapering of bond purchases. So that's where we are, right? And then you come back, you maybe have less cash in your account, and you think, well, that was a bit mean. It's like, well, that's rock and roll. You're trading a live event with live releases every second, right? It's not like a data release where you can go, well, that number there is better than this one, and that's what we're going to buy it. Like we're talking sentences, variance in sentences from positive to negative to neutral, and they're just coming out one after the other. And if you do have metastock, for example, right, have a look through here. You have a look at the extent of the comments, right? And if you're trading on one sentence alone, you are sadly mistaken for how this works, right? Because it's dynamic. There's lots of variables, and he's answering questions, not only from the statement, then goes into the press conference. It's epic, right? If anything, me as a pro sitting back, I'm like, yeah, okay, I can see the first move. Let's see what he's got to say about the next part, right? So anyway, these are tricky events. If you've gone too aggressive, well, that's one thing you have to sort of really assess. Now, what does that do for us for the rest of the week? There's no point sort of flapping about and sort of worrying about what's happened. Where does that sit us? Well, to me, when you look at the majors now, they've been somewhat neutralized, okay? Euro's back in the range. I mean, this trend line here in sterling's back up, so it's just chopping around the middle of the range. Aussie's at the top of the range. Like we've sort of got a little bit of dollar weakness at the end of the session. I don't think that's going to be long lasting. I think these currencies will drift straight back into the middle of the range. So that doesn't give us a lot to work with, right? It does going forward when the next round of data coming out. But when you look at the like the Aussie employment numbers coming out, do we have an edge here on the currency? Well, maybe a slightly bullish Aussie just at the moment, but I don't feel very confident with momentum in the US dollar. It looks like it's completely sizzled out. And this is going to be quite interesting now, because if you thought trading that was hard, we've got the Bank of England, right? Now, Bank of England got their hands full. There's a lot more panic around the Omicron than anywhere else. And alongside that, okay, 45 minutes later, you got the ECB, right? So you're going to have, if you thought the Fed was tricky, this session coming up in the European session is going to be as loose as you like, right? So take a leaf out of this book from the Fed. Don't jump in. There's no chance of rate changes here at this point. I can't imagine that happening, especially with the threat of the Omicron through Europe, which seems to be much more prevalent than anywhere else. And then we're sort of coming down to piece together where all the other things are. So right now, it's almost like a reset for the US dollar, right? We've got a reset of the plan. We now need to get dollar momentum. We need US numbers, right? And there are a few things coming out. But first of all, we're going to get through the Bank of England, the ECB, and then try and make odds and ends of that, and then work in the data for the rest of the week. It's going to be tough. I just, you know what, there's some good things coming out later in the week, like the IFO business numbers, right? Once it's all said and done, we've got the central bank information out. I think that's the time to be looking to trade potentially euro as well around these numbers, because once we've gone through the Bank of England, the ECB, we'll have a much better idea of what their thought pattern is. I can't imagine it's not going to be as good as the Fed. And we can see here, even with the solid plan, you're going to get some wild moves on euro and sterling for that matter. But just plan for volatility. What that means is probably reduce your trade size if you are looking to trade. Redraw, reassess your trend lines, and prepare technically for the opportunity so you know where to get in and out. I think it's a tricky one coming in a week out before the holiday season kicks off. It's not the most ideal time when you don't have that clear dollar trading opportunity. One thing I'll be looking for, and this is probably more, 24 hours after the Fed come out, there's usually like the dust settles, everyone has a chance to think about what's going on. One key thing to look at tomorrow would be the US equities. If they continue to rally, well, then there's really the pressure is off interest rates in the US, and we may see further dollar weakness there. Right now in the Asian session, we are seeing the US equity futures going up. Right, that should give the Euro, Sterling, Aussie, Kiwi a little bit of an upward bias to start with that risk on profile, and we'll just have to see if that continues. So big session coming up. I'm not, as I said, when there's no chance of change of rates, I try and avoid the central bank meetings, right? It's a bit of a bloodbath, but look at the other components of the market, whether it's equities or bonds, and you should get an idea of what the flowing impact is, because there's so much noise around the comments. It's often hard to decipher what the hell's going on. But if you look at the equities or bonds or treasuries for any of the instruments, you can often see, what's actually moving. Where are things going around here? So this is why it's important to have different templates so you can see what's happening on your bonds, okay, for that matter. And if you are looking for further clarification, go to your equities page. I'll just get that up as well. And you can have a look at the global equity markets, right? See what's moving. Is it positive or negative as far as interest rates are concerned? As I said, I can't imagine the ECB, Bank of England, changing rates or doing anything like that. But have a look at the European equities, right? That's probably a good starting point to see what the impact is from the central bank announcement, and that will lead into where the currencies go as well. All right, guys, it's pretty complicated, these central bank events. As I said, when there's no chance of a change of interest rates, it can get very loose, and that's exactly what we've seen here today. But good times. It sets us up for better trading conditions for the dollar, what the Fed has done today, and better opportunity for them to manage the economy. It gives them flexibility. It's a pretty good thing. Not immediately as far as your trading goes, but it'll get clearer as we go forward. All right, guys, all the very best. Like, as a last thing, just keep your trade size within a good manageable size. Otherwise, you could get these positions very messy very quickly. All right, guys, all the best. Good luck. Cheerio.